Hello and welcome to another update video on FET. The FETCH.AI chart continues to be in a correction, in a corrective pullback, but we have seen a bit of a bounce now, small reaction to this support area here, which you might know starts at 66 cents. That's the 38.2 retracement. It's the, you could say, upper resistance level on our chart. That's normally the first level that we really consider for such a correction, for a pullback to complete, labeled in wave B. I'm talking about the B wave that started here on the 23rd of May. So this correction might complete in this region, and then from there we could see a bounce, a rally. Now, is the correction already over? I'm skeptical at this point. I think we could see a bit more of a rally maybe into this area here, between these two green lines. I would not rule that out, absolutely not. That's actually very likely, which could play out in the form of a B wave. So A, B, C before going down lower. I'm tracking something very, very similar on the Bitcoin chart, by the way. But yeah, overall, the the idea is that the trend is down still, and we are currently only testing the nearest micro resistance area in this correction. By the way, this remains an overall bullish structure. We do have a 5-wave move up into the May high, 23rd of May high. Then a corrective pullback could be unfolding right now, and I'm tracking it as a WXY structure. And then the Y wave is an A, B, C. And yeah, as long as we're now holding above this micro resistance area between 71.7 cents and 68.5 cents, as long as we stay below that, the pressure is downward. And there are, of course, some additional levels, like, for example, if we break above the nearest resistance area here, we will likely attack the next one, next swing high located here at 74 cents. And the break above it will confirm that at least the B wave, which presumably topped on Monday the 16th, is actually still unfolding. And then we have a more extended B wave corrective rally. Overall, as long as we don't really break above this solid green line up here at around 83.5 cents, that's the swing high from the 11th of June, it looks like that the market could still find a way to continue the pathway lower. Now, at the moment, we're only testing the first resistance area. We're not, we haven't broken above it or anything, and this also looks a bit like a 5-wave decline. So I'm tracking it as a 1-2 setup to the downside, and I'm watching for signals that we're breaking below the Wednesday low here at 63.5 cents, because that would be a confirmation, further confirmation, that an internal third wave to the downside is likely unfolding, and we are moving down here into this blue zone. This is the zone where ideally the price would attempt an upside reversal. We, as you can see, looking at the microstructures, we might still have some downside adjustments to follow through on. There could be some more downside squiggles here in wave 3, then wave 4, then wave 5. So that's pretty much at the moment what I'm watching here on the FET chart. I see this as a wave 2 rally. There are 2 more levels above, which I mentioned. And yeah, overall, no sign at this point that the corrective rally is over, or that the corrective pullback is over, and that we're getting into the next rally. But we're watching overall, but I also have no sign that this local wave 2 has topped. So it's a bit of a tricky one, but until I get a 5-wave move up, and that's very important. So I'm expecting lower until I get a full 5-wave move up that breaks above this green line at 83.5 cents. That's the update on FET. I hope you liked the update. If you did, please hit the like button, leave a comment, and subscribe. And if you really like the content, then please check out the channel membership. Also, make sure you follow us on X for additional content, additional setups, discussions. You can also ask questions here on X. And hope you'll join us here. Thanks so much. Bye-bye.